If you looked at all tech IPOs so far this year, they're up a little bit less than that, right? So around 13%, give or take. But if you do X ride sharing, which you and I have talked about before, you're actually up about 20%. So actually you've been okay. What's interesting is if you look at from the first tick or the close of the first day to now, all tech IPOs are down slightly. And the question is what's driving that? And I think what you're hearing or seeing is investors right now are looking at a couple of different things, right? They're looking at one, what's the revenue visibility of these companies? Is there a backlog, a reoccurring nature? How can I get comfortable in a tumultuous tape on what's going to happen? So one of the things we did was we carved up the tech IPOs this year and said, okay, well, who is more of that has those attributes? Who's got, recurring revenue, good visibility, all that stuff? And when you look at that, it's actually interesting. Those stocks are actually up over 30%, right? So you're seeing investors put more emphasis on, names like that they can feel more comfortable.
Is that heavy cloud?
It's heavy cloud. There's a lot of cloud, a lot of software, exactly right. So big when you can have that, SaaS, that sort of recurring revenue. The other thing we thought was interesting too is we looked at the conviction of portfolio managers. And what we saw is we looked at if you, on the first day you popped greater than 40% or you didn't. If you popped greater than 40%, those stocks are up about 30%, give or take. The ones that didn't pop 40% are flattish to down. So it's interesting sort of seeing how investors and portfolio managers are bifurcating the universe and where they're putting their bets.
As we're talking about this, I want to mention the NASDAQ has gone positive or at least reached break even, no longer on track to be the worst week for the Dow, though, hey, anything could happen. How much of this, Bob, might be just a revaluing of growth in general? Because I'm looking at stocks that are toward the low end of where they've been trading for the year, kind of ex-January, because that December dip was crazy. I'm looking at VMware, Workday, Autodesk, Palo Alto Networks, Twilio, Zendesk, Stitch Fix, Yext, none of which just went public, but all of which are behaving kind of like these IPO stocks. Is it not really about IPOs? Is this really about growth?
It's funny. I think you're hitting it right on the head. And one of the names you and I talked about before was Shopify, and what a great stock that had been over the last year. But all these stocks you just mentioned, we did a screen before we came here, and you can see they're all down double digits, sometimes 20, 30% or so. Still up for the year, but having retraced a little bit. And I think what you're seeing is a little bit what I was saying there as far as the portfolio managers and investors being just very focused on what they're paying for multiples. Have multiples gotten ahead of themselves in certain cases? Still good businesses that are executing, but more of that risk-reward trade, particularly as we're heading into a tape. We just don't know what October's bringing for us.
When you look at the sell-off, we have seen just across the market broadly in the last couple of days. I would imagine that it's creating buying opportunities within internet. Where would you see those opportunities?
Yeah, great idea. And I know Mark Mahaney's coming up in a little bit. I'll let him go on a specific on those things. But I will say this. On the M&A side of things, corporations are still looking very closely at opportunities, particularly as valuations pull back. So we're still seeing an uptick in M&A. For the third quarter, M&A was flattish, down about 2% year over year. But for year to date in M&A, it's actually one of the best years, one of the top 5 years on record. So it's been a strong year in M&A, but you do have companies looking at that right now. Can you take advantage of some of these companies that have fallen back?
Does that make you believe that they think trade resolution is happening?
That's by far the biggest question. Trade, the health of the economy, interest rates, the election coming up next year. So you're seeing a lot of focus on that. And particularly, depending what sub-vertical you're in and you're focused on, that could be an impasse. You may not be able to do anything because you need some of those things to resolve first. But everyone is very tempted, I'd say cautiously optimistic on trade, but no one really knows.